is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, guys. This is Teddy Keckstedt from Forex Trading Unlocked, and I am subbing in for Tommy O'Brien today for the hour. And I'm going to walk you through the different segments of the show today. So we have my website, forex-trading-unlocked.com, pulled up for you. At least I believe the producer should be having, I guess, my face as well as the website pulled up. I already have from the navigational tab, the workstation page pulled up. So we're going to scroll down real quick to the economic calendar. You always want to make sure you have a heads up on what's going on with the news events. You don't want to get caught off guard. So the big ones to pay attention to that we have coming up this week with what's time we have left from this Wednesday. So today we have ISM coming up for the U.S. dollar, as well as the interest rate market may start have a little bit of a stir. I would say that it's probably going to keep on trending the way it has been trending. Most likely not any high, any type of really big surprise there. So the big one to watch out for actually is the numbers tomorrow, actually, when we get to the U.S. dollar for unemployment claims. And also for, let's see, we have on, I think I just went past it. Initial jobless claims for Thursday. And then we have on Friday, we have also for the unemployment number, which will also be a big number for the U.S. job markets. My perception of what's going to happen is unemployment claims are going to go up on Thursday. Don't be surprised if the unemployment number goes down, though, on Friday. So these are going to stir up the interest rate markets, the stock market, as well as the currency markets. So let's see what's going on here. The number one part of the dollar index is the euro US dollar, which right now is on its highs as we're broadcasting. So the dollar has been getting hit for the past couple days, and there is a play going on in the dollar right now. The dollar bears are in all the different cross rates for the most part, leaning on the dollar. So is it because of what's going on in the economy or what have you? I think the biggest reason is what's going on with the interest rate markets. That's why I believe the jobless claim numbers as well as the ISM today, unless that comes out as a surprise, I think we'll be leaning more on jobless claims and once again unemployment on Friday. I think that's when you may see a turn in the dollar. Don't be surprised if we see the dollar continue to get hit all the way into Friday's number, and then probably early on Friday morning, once the unemployment number comes out at 7:30 Chicago time, that we'll probably see a little knee-jerk reaction. So the Treasury bond market has been rallying the past couple sessions, meaning rates are going down. Remember, that's an inverse relationship. So let's make this chart a little bit bigger and clearer for you viewers. So we have the daily chart here right now. As you can see, the technicals are leaning on kind of being neutral right now for this market. Overall, the trend, it's coming off of a nice little low. It's right now in a corrective phase because for the last couple months, it's been basically trending lower. Last couple of weeks, we've seen dollar weakness. There's a lot of reasons for this. A lot of it has to do, I believe, with what's going on with the job markets, and the economy is not exactly where we thought it would be, at this time of the summer already. Most people were expecting us to have a little bit more of a bounce. So I think this is going to be reflective of what's going to happen with the U.S. dollar. The euro as a whole, I am not bullish on. I don't think that the strength you're seeing right now is reflective of what's going on in the EU. Not that their economic numbers are not going to be important, but I would think that more of what's going on right now is you have a dollar sell-off going on across the board, mainly because of the 30-year. Right now, as I look at real quick at the Treasury bond market here, they're up 26 ticks, so they're trading at 166.24 basically. I'm going to show you the 30-year Treasury bond chart. Now, futures has to always be in delay, so this is from yesterday's close on the daily. It's settled at 166. So for those of you that are not bond traders, It's almost up a full dollar today in front of the ISM number. It's also pushing new highs. So this is meaning that the trend for interest rates is going down as far as the market rates. This affects currencies. As the interest rates go down and the treasury bonds and the 10-year notes go up, the U.S. dollar goes down. So the value of the U.S. dollar right now this is where the bearishness is coming from. So right now with this euro strength, which once again, it's right on its highs right now. If you look at the hourly basis, you can see that if you look at the ranges that we have here, we have 1842 up to 1895. We have a 45 pip range over the course of just the last few hours of trading in this morning. This is as Europe is winding down and we're coming online in the United States. So this is a nice little show of strength. I think you're going to see follow through this on an hourly basis. Don't be surprised to see the euro, I would think, up at maybe 119.5 by probably sometime tomorrow, maybe even into Friday. Could you actually call me on an account during the break? Nice question. I can't call you during the break, but we can figure something out with the producers to be in touch for sure. So thank you. So anyhow, once again, the euro US dollar, we're seeing that strength there because of dollar weakness. So we're gonna, as we get through these other markets, you'll start to see the correlations, and it's going to all start to make sense, especially when we get to the Australian dollar, which is a big bear, and right now it's getting a bounce fueled by this. So the second biggest component of the dollar index, let me just quickly change this, is the British pound US dollar. As you can see, the British pound here now is also rallying after the past couple days, a little follow through. It's not on its highs like the euro is, but it is definitely in a nice rebound here. This market also is in a corrective phase to the upside, but now it's being pressed because of this US dollar weakness. But I would use caution with this, because as we have these numbers that come out, unemployment claims and unemployment on Friday, like I said, I predict that you're not going to see much of a difference. You're going to see a trending higher unemployment claims Thursday and possibly lower number on Friday. But we're not where we want to be. If this trend continues, though, with higher unemployment claims and also unemployment starts to go back up, don't be surprised that the bond market's going to sway in a big way. So overall, they may have an extended rally, but you're probably going to see a big knee-jerk reaction over sometime on Friday morning, I would think, or into Thursday into Friday morning, where you're going to see a dollar rally and you'll see a bond sell-off, which would mean something like the pound also, we're going to come into some highs. So as far as, let's find an area here, since we're talking about this. If you look at where we started this slide, there's the old 50% rule. And here's where I'm saying that we're probably looking for a knee-jerk reaction. The 50% rule we've already hit. We already came into that last week, and we've been bobbling around that, okay? Now, if you put this 0.618, and there's a reason why, you know, whether you're Fibonacci or Gann, 50% is a big floor trader number. It's always been in the for over 100 years. It's a classic retracement level. It's also a Gann number. It's a Fibonacci number. So it really works well as far as price targeting when it comes to trend reactions, especially. You can see that we stopped buffered up against this 50% level on this chart here. Then we fell just shy of the 0.618, and I think we're about to run. Oh, yeah, one more minute. So as you can see how we're chopping around here, these are harmonically very good pivot points. And now we got a break. So we'll be back with Kevin Hicks in just a minute, and then we'll continue with more FX.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Hello, everyone. This is Teddy Keckstead filling in for Tommy O'Brien today, and we have Kevin Hinks from TD Ameritrade. I hope on the line with us. Are you there? Okay. I don't know if Kevin, if you're there or not. I don't hear you. So I guess I should just go on with the. I don't know if it's coming in. I don't see anything on the chat. You guys, she'll throw me something if he's talking or if he's got any questions. I was going to ask him how he's doing today and what he's looking for. Oh, you don't have Kevin. Okay, all right. Well, then I'll just get back to what I was doing before then. All right, so we were talking about the British pound US dollar, about how it is buffering around in this nice little pivot area from between the 0.618 and 50% levels from the current high that we fell off of and had this bearish correction that's been going on for the summer. So right now we've been viewing this rally that's been taking place. Now, ironically, this is coming into some nice numbers. So you see how nice this flow is on the website here from forex-trading-unlock.com. There's no pop-ups and stuff. So anyhow, this buy signal initiated this little corrective rally. Now we have this little gyration that's going on. What's interesting is we have all these numbers that could shake things up. The question is, this kind of may have a little tug of war here. This little red line right here from 3 sessions ago, that is a short-term sell signal. So this is a key high that we're looking at here. So for your aggressive shorts right now, I would say that, I mean, anything can happen, that's for sure. But if you use the high from right here, which is right on the 0.618 level, right around $1.3988, this would be a good risk level if you're going to be trying to be a short and if you're trying to jump in front of a trade, especially if this is a short-term high and this is now starting to get ready to reverse and resume the bear trend that it's been in on the more longer term. If it gets above this level, however, be very cautious. I would not be trying to sell into any rally above $1.3988 here. This momentum, most likely you're going to see a lot of buy stops here because all your weak shorts, like this is why I'm saying this is a layup right now for, it's a low risk short. There's probably a lot of takers for this type of opportunity that's setting up right now. So if it's wrong and we make a higher move high, a lot of the weak shorts will trigger an extended move higher and helping to fuel the buying momentum. Now, like I said, the U.S. dollar right now is under pressure. You have to key off of what's going on with the interest rate markets. Should we have, let's say, some big surprise tomorrow that we have unemployment claims that just drop, especially significantly? I mean, anything could happen. Do I believe it's going to happen in fantasy land? Perhaps, but I don't think it's going to be a reality. Should that occur, that would change things. You probably would see a big sell-off in the bonds already on Thursday and the 10-year. That would give a lift to the dollar. Remember, as interest rates go up, meaning interest rate pricing going down, it makes the value of the dollar go up a little bit, especially versus certain currencies, depending on those other relationships. So the pound right now, like I said, if we're going to maintain this bullish momentum, we will definitely have, with the dollar weakness, we should propel above this. If we're running out of gas, we're kind of set up right now where we might start to see a turn. So we'll see. It's very interesting. We're looking at it. We have divergence in the currencies to begin with. So the dollar index isn't something you can use as a leading indicator for the broad base right now. I mean, obviously, the dollar's under siege against most currencies, so the dollar index is taking heat. But that's only what's happening right now over today and yesterday. Over the past couple of weeks, you've had an indifference of currencies fluctuating. So it's only right now. And when you have all these currencies trending one way versus the dollar, or the dollar going one way against the other ones, however you want to view it, that doesn't last forever. So we could be coming into that critical juncture. Usually unemployment, a lot of times, and an experienced trader will tell you, it's very often that you will have markets trend into unemployment. You'll have a very big gyration that day. Use a lot of caution. Be careful. The algos feed off of those frenzies with news events like that. Remember, there's event trading. News events, especially big economic numbers, are news events, and you can control. That's why we looked at the numbers when we started the broadcast today, to show you that what's going on ahead that actually matters. So for the British pound, we have a little upside potential, but right now I'm looking at this as a good selling opportunity. So key off of the low from yesterday. If we take off this low right here at around 138.72, then I can see this market setting up a nice little correction. Now, is it going to be a big correction? Probably not. Let's put the fib here, and let's erase this fib here. We don't want this chart getting too jumbled up here. All right, so very easily, we once again are going to shoot down to our 50% rule right here, and we're also going to check out our 0.618 because that gives us another retracement area. So should we slide, and our short-term sell situation here is good, you're most likely going to see probably a slide down into this area over the next few sessions going into next week. Okay, so this would be a good target range if you're bearish, and we start to, let's just say, be sideways. I mean, this market, if you look at it from the back, if we go all the way back from February all the way into now, we basically have a low in the pound of 135.67-ish area and a high up here of 142. So this has been our trading range for months now. We've been basically sideways. For the summer, we've been in a bear market with a short-term bullish correction going on right now. The key is, what are we going to do? Is the bull going to survive? As far as, like I said, right now, the dollar is under pressure. It could turn on a dime. If the dollar does have a big turn, it's going to shake up all these currencies at once. So you'll see where the pound's railing against the dollar, it's going to fall back. Where the euro's railing against the dollar, it's going to fall back, and vice versa, depending on what the different currency is. So we have some good points here as far as downside for a short position. As far as upside here, if you do get a breach, I would say for the pound, look out, because this thing could easily have itself back up to this 142 area, especially if you look at crude oil. Crude oil right now has been going sideways. We hit our $75 price target that I've been talking about with Tommy since back in December, end of December, beginning of January. People might look at the oil market saying, oh, now it's going to settle right now and be sideways. We're going to hover around $70. We may very well do that. I think right now what you've seen is we've had a lot of profit taking, and we're chopping around. We're getting some very good ranges. When you have volatility, I mean, if you look at the trend in oil, how it just has been inching along. Now we're talking about oil because it impacts the pound. When you have volatility like that, that means there's a lot of money moving. So I think what you're going to eventually see is, as this starts to settle again, we're going to start to trend, and most likely what we're going to do is make a breakout to the upside. What does that mean? If oil does start to rally, we're going to probably see this market breach this 139 area. However, we have oil numbers that come out later on today. If those seem to be positive and the oil market has a sell-off and starts to pressure support, that's another reason where we might see the pound start to run out of gas with the U.S. dollar is also, no pun intended. So that might help the short-term short position actually fill this little potential scenario and get us down into this area. So let's see, we got one more last minute. So we're going to bridge over to the US dollar Swiss before we take the next break. And as you can see, the Swissy is definitely hitting the dollar. But if you look at the ranges, even though it's making a new low as we're speaking right now, nice thing about FX is we can talk about it in real time, unlike the futures. So, yeah, dollar weakness prevails. Remember, the Swiss is one of the flight to quality currencies, just like the yen is, depending on what trade zone you are. Obviously, the dollar is flight to quality. But when the bonds are rallying, and they're not rallying because of any natural disasters or whatever, the dollar is not going to rally. There's no flight to quality in the U.S. dollar. So we see the Swiss. We're going to be watching that for a turn too. We're also going to be looking at the yen, and we'll get to that after the break. So we're going to set up these trades. Right now we have this downside momentum is very, very clear. Let's see if we use the Fibonacci again, how close we are to maybe finding support. Well, we fell through the 0.618. Obviously, we fell through the 50%. So that means that this trend here is definitely going back to its overall bear trend that it's been in. This was a corrective move to the upside. We also had a head and shoulders pattern here. Here's a shoulder, here's a head, here's a shoulder. And that helped to set off this little slide here. If you look at once it took out this low, which was just above the 50% line, that's significant. It means that as targets with the head and shoulders, technically we would be down into this area looking to test near this support that we had earlier. So I would be very mindful of what the Swiss is doing overall. I think that when it comes to the European currencies, we're going to take this break and then we'll get back to it.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey everybody, this is Teddy Keckstead. I'm back filling in for Tommy O'Brien today, and we left off, we were talking about the US dollar Swiss. which, like all the other currencies right now, is beating up the dollar. As we're talking right now, it's actually hanging off of its lows. It's making a lower move on the day. However, the range, if you look at it, let's see, the range today, we have a low of 90.20 and a high of 90.60 as a 40 pip range. Not too extreme, as it's starting to ride support. The funny thing is, it helped to confirm our head and shoulders here, and we are heading into what would be the target area for that. We had an initial 50% rule in 0.618 for retracements. It penetrated that and is now back into this area where we had found support from this breaking market earlier at the beginning of the summer. Overall, there's divergence in the currencies with the dollar versus all the European currencies, Asian currencies, wherever you want to go in every trade zone, there's been divergence over the past few months. When you look at Europe as a basket, like right now, they're all trending as bulls against the dollar. That's on a daily basis today and yesterday. Overall, though, the euro has been very sideways. The pound has been much more of a bull versus the dollar, even though it has been selling off recently. Obviously, the Swiss is in a bearish decline over the past few weeks. Overall, the Swiss is a flight to quality currency. It's a little bit stronger than most of the other ones. It's also, when it comes to as far as what's going on between, Brexit is already, it's post-Brexit. The UK and the EU are not necessarily getting along. They're not having fun on the playground, if you will. So, but the Swiss isn't really involved with too much of that. So it's a little more rock steady. I'm not looking for this trend to really continue in a big way. I think as long as the U.S. dollar is under pressure, you're going to see the U.S. dollar Swiss continue to ride support, but not like in a major sell-off. Like if you look at the last few sessions, it has a very tight range. Like it had broken through these pivot points with nice ranges, and they were all settling on their lows, basically opening and just tanking. Now, not so much. So I think that as the volume and this volatility starts to subside, you're going to start to see it find support, especially because if you look at it, this little area here, and we'll change the color so it makes sense. Change this real quick to, let's just go with this. All right, so we have good support right here. This is where the market basically had double bottomed, and we had bounced up and had this little correction, had this head and shoulders, and now we're sliding back here. If you look at the range, though, where we've been trading from March to now, we've been between 89.30 basically and 92.5. We did extend a little bit above it, but we obviously couldn't hold it. But the majority is in this area. So I don't think this trend, and especially when you look at the velocity of how strong it is, the dollar hasn't been getting beaten up that severely over the past week and a half. This decline is pretty strong, especially when there's no reason for there to be such a big slide with the Swiss versus the dollar. So I think momentum is going to run out of gas. Remember that markets tend to go out like they come in. So the more severely this market slides, especially off of no real news, the more likely it's going to have a big snapback, especially if we have the scenario like I'm saying that unemployment, we may be trending into unemployment somewhere in between tomorrow's unemployment claims and Friday's unemployment actual monthly number, where we may see a spike, meaning that the interest rate markets are going to spike high and then reverse gears. The dollar is going to spike low. And when that does, all these other currencies that have been bullish against it for yesterday and today, going into the next couple sessions, most likely you're going to see at least some profit taking. So am I calling for a bottom? No, never try and pick a top or a bottom. What I am saying is that we have a very good scenario where if we trend into the next couple of sessions, you're very likely to see a recoil on Friday, especially as the foreign markets are closed and we have nothing left but the U.S. markets open. So you'll have thin volumes. You'll have most of the planet already calling it a weekend, and we're going to leave it to the algos in the USA and whatever, and whoever is trading the markets. So for the U.S. dollar Swiss, obviously, we're continuing to make lower move lows and lower move highs. So the trend is your friend. Always stick with it. That we do not have a buy signal in this. So we're looking for a reversal of fortune somewhere with the U.S. dollar. So let's look at the U.S. dollar JPY. Okay, U.S. dollar JPY. Oil's been under pressure. That's kind of a good thing. That's another number today. If that comes out and all of a sudden the oil market tanks, I can see the U.S. dollar yen continuing to go lower. I'm not very bearish this market, though. Overall, this market is in a bull trend. It has, in the very short run, over the past month and a half, since July started, been trending lower. We came off this higher move high, but we haven't taken out this low from a few months ago. And I think that no matter what, when it comes to 107.5 area, this has nothing to do with 50%, by the way. So when I say 107.5, this here is a very good support line. I don't think that the yen is going to get down below here. The only way I would see the U.S. dollar yen falling below 107.5, basically 44, whatever, is you would have to see oil back it down, let's say $65 to $62 a barrel. I don't see that happening anytime soon, but you never know. Should that happen? Should unemployment go down? Should unemployment claims go down tomorrow and the unemployment number go down as well on Friday, then very likely that you would see further downside action in the U.S. dollar yen. I would not try and catch a falling knife, but I would be very leery of trying to sell into this break. I think what's going to happen is, once again, we're going to trend into Thursday, Friday, and then we're going to see a reversal. However, we have been making off this higher move high, we made a higher move low, and then now we've confirmed lower move high, lower move low, a lot of yada yada, and we're making lower move lows right now. So we don't have a turn, we don't have a true buy signal yet, but here's my premonition is that sometime between Thursday and Friday, we're going to see a bunch of buy signals and sell signals in all these currency markets. Just like when we had here, remember we had these different sell signals I've been pointing out, by the way. These are all high probable Japanese candlestick patterns, which I wrote a book which is titled High Probable Japanese Candlestick Patterns. You can check it out on Amazon. So here we had this sell signal here. This was when this happened here at the beginning of July, we had a turn in all the currency markets. The dollar reversed gears. So, and if you look at the dollar index, you can go back and see what was going on at the beginning of July. Remember how I said it's a mixed bag of goods and divergence? We had all kinds of turns in multiple markets at the beginning of July, meaning the dollar's been under pressure. But if you look at it, the dollar index was rallying all the way up until the end of July and has only been trading lower for the past couple of weeks. Interestingly enough, we have a buy signal that occurred 2 days ago. So back on the 30th, back on Friday. This is a short-term buy signal. I would key off of that low. Right now, we're coming to test that. So back to the U.S. dollar JPY. So the dollar is trying to find some strength, but as you can see, unlike these other markets that are trending, the dollar index has been very choppy. So it's not a very good indicator, but if it does hold support and start to spike upwards, then we're probably going to see, like I said, that reversal of fortune. So we'll check out here with the good old fib once again, and we'll key off of the low that brought us up to that short-term higher move high, and now we'll see what we have here. So for 50%, obviously we took that out. 0.618, we took that one out, and those are both key pivot levels. So the key is what we need to see is us to get back above 109. Overall, I think what's going to happen is, like I said, we're going to trend lower for the next couple sessions, look for a breakout. We'll be back in just a couple minutes, guys.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hello, everyone. This is Teddy Keckstead filling in for Tommy O'Brien today. I don't know if they have a caller that's trying to get linked in, but I'll take it, and we can go over to the U.S. dollar Canada, which I'm going to get to anyhow. So, okay.
Hello?
All right. Yeah, hello. How are you?
Yeah, Teddy?
Yeah.
Hi, my name is Michael. I'm calling from Niagara Falls, Ontario. I wanted you to take a look at the U.S. dollar versus Canada.
Okay.
And
Sure.
give me your gut feeling. What's going to happen if Justin Trudeau gets a majority government in the upcoming election?
Okay. Well, U.S. dollar Canada, we'll pull up the chart right here, right now. Obviously, it's seeing a little show of strength because the dollar is under pressure, which we've been talking about today so far. I don't know if you've been on the whole time. So I think that you are going to see.
Go on.
I'm sorry? So anyhow, I think you're going to pressure the resistance, definitely following through over the next couple days. One thing to note, U.S. dollar Canada has been in a bear trend for a very long time. We've been in this nice upside correction for the past month and a half. Now, I've been talking to Tommy about this one for the past couple of weeks, viewing this as basically just an upside correction. I think that overall the U.S. dollar Canada trade, no matter, even if the U.S. dollar becomes a bull, I don't see it being a bull versus Canada, and it does get into the politics. I've been mentioning to Tommy and not taking any political side. I don't understand why we've had such a indifference between our current administration in the U.S. and also in Canada. The fact that our borders are they've been behaving like they've been doing, especially with outside of trade. The whole Trudeau factor. That is a big deal coming up with that election. I don't even want to begin to predict how that's going to go.
You don't know. You can't, are you prohibited from issuing a personal opinion or something? Or
No. I mean, I personally think that Trudeau is horrible for Canada. I would like to see him ousted, 100%.
You had said that.
So, but yeah, like I said, I think he's going to get reelected. I personally do believe he's one of the worst things for that country as a whole. But that's aside from things. What I don't understand is how our two countries are not behaving better than they are. So that I think is a frictional point. So no matter whether it's a new administration or especially if it's Trudeau, there's going to be more of the same. We're not going to see any change in that. I think you need a turnover there. Maybe that changes things. Maybe it doesn't, because this is not just coming from their side of the fence. This is coming from our side of the fence. Once again, I don't understand why. What I do know is that the price of oil. was driving the currency trade for a very long time. It stopped about a month and a half ago, and especially now that we do have oil that's been kind of jostling around, I still see oil going to $100 a barrel. I think I think it's going to be there before the holidays. I think by Thanksgiving we'll be there. I was looking for us to hit 75 somewhere coming into the summer, which is where we're at. This little period of bobbling around, I think, is very, very normal. You got to remember is that all of a sudden Iran is selling oil on the open market. That came out of that's just something that's brand new, you know. So, but that doesn't mean anything.
How can you justify $100 a barrel then?
Let me get to that. You got to realize Iran hasn't made any money selling oil for a very long time. I can justify it in very many ways. OPEC is making money. You know, you got to remember that demand, no matter what, gas has not the demand for oil. The demand for oil is blacktop. We have one of the biggest infrastructure plans coming in front of us. Why would the suppliers of blacktop why would they drive the price down? That makes no sense. They don't care about gas and electric cars. They don't make any money off of gasoline. That's a whole myth. It has nothing to do with the oil trade, you know. And the more we suppress oil in this country, the more our costs go up for it. Why would they, when they know that we need it? We're importing it now for infrastructure basis, you know, for plastics and everything else.
WTI is heading to $100 by end of the year. That was back in 2014, summer 2014, we were in $100. Canadian dollar was pretty good. It was at par.
Right. So, you know, I mean, you got to remember when George Bush was president too. You had oil up at 150. You know, so I mean, these are things that it's not, and that was under different circumstances too. You know, so. I mean, and unemployment has a big issue with this too. You know, as unemployment stays stagnant or potentially goes higher, you know, these are going to impact the oil market as well. But let's say the oil doesn't go to $100. Okay, long term right now, I still say that the U.S. dollar Canada is in a neutral to bearish trend no matter what. I don't see it really getting up to a very high level with the U.S. dollar as far as being a bull. You know, just because unless the politics break. Unless oil really starts to fall down, you know, which like I agree with you. You would think that oil prices would start to stabilize now with Iran. But then you've got to remember, Iran comes online, we're producing less, you know, so how much of that, you know, where's the balance come in? Is it net positive oil production in the world or net negative oil production in the world, you know? So these are numbers. And then there's also the cost of, you know, cost of carryover and a bunch of other things, and who knows how lockdowns do or do not come back into play. And I'm leaning on the side of that with all these variants, you know, not to put a stance on what I believe is going to happen with it. If these variants continue to grow, how can we not go back into where we were a year ago? You know, how do we stay open? If you gotta take one side with the other. If it really is as dangerous and it is what it is, we're going back to lockdowns. If it's not, then it's a totally different story, you know. Okay. So, but I think, sorry?
Your book that you published, how much of an influence was Steve Nyson on writing your book?
You know what? He was where he was the biggest influence to me was the fact that he helped bring it to light. I read his book back. I was still in college at the time. This was back in the early 90s. I read another book, which was by the first one to actually bring Japanese candlesticks to light in America, which was written by a Japanese gentleman. And that was back in the 80s. Okay, so, and that was a very good read. Nissan brought it to light in a way that makes it, you know, like my approach to whether I teach or talk about, you know, the markets or whatever, I try and keep it in a kindergarten, very simplistic approach, because if you get above people's verbiage, then all of a sudden you're going to lose them and they're not going to get the concept. So conceptually, his approach to candlesticks, I love. I love the fact that he really brought it to light. What I don't like about him is my book, there's so many different candlestick patterns out there. I mean, you could write, volumes on it, you know, but as far as how often they occur and how well they work, you know, and that's a whole nother story, you know, and he doesn't get into the fact that What I've experienced when it comes to Japanese candlesticks from people in the business on and off the trading floor is there's people who use them and love them, and they understand how they work, and they use them like I do. And I'm not saying that I know the only right way, but I'm just telling you I know the guys that this is how it works. There's guys that use it on time frames that they don't work. If you're using Japanese candlesticks, like especially intraday chart traders, they'll have the 1 minute, 5 minute, 15-minute charts, 30 minute. If you're using those small time frames and candlesticks, good luck with that. I don't care whether you bank on them or fade them, you're going to lose money. So we'll be back after this break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hello, everyone. This is Teddy Keckstedt from Forex Trading Unlocked. I'm filling in for Tommy O'Brien today. We got the last segment of the show before I turn the reins back to them and call it a day with you guys. So we had a nice conversation with the caller about the U.S. dollar Canada. So we're going to finish up with this, and I'm going to blast through a couple of things, give you some nice things to think about as we end the show. So for the U.S. dollar Canada, the gentleman we were talking about Japanese candlestick patterns. Well, one of my favorite ones is the 3 inside up. This little arrow right here, you see this down day and these 2 consecutive up days. This is a short-term buy signal. So we were talking about some politics and whatever, so let's just talk about the technical aspects. Overall, I'm a bear on this one. It's a long-term bear trend in an upside correction right now is the way I'm viewing it. This short-term buy signal has this market going up towards this 126.10 to 126.60 area. You'll notice that the U.S. dollar is under pressure with most markets today. Now it's kind of sideways. It's finally starting to go a little lower, but you'll notice that where the dollar was getting hit by other markets, it's been rallying against the Canada. So is this buy signal good? Well, according to my book and the way I would play this, and I am right now, I'm still looking for a counter trend trade right here of a rally up into this area, even though the dollar's under pressure. Outside of long term, I think it's going to be a little choppy. I don't see any big upside potential. I see more of a return to the downtrend eventually. So short term, possibly rally up, going up into this area over the next couple of days. Remember, I'm talking about a lot of markets reversing gears. It could happen that the U.S. dollar does in the Canada, while it does versus other currencies as well. So speaking of U.S. dollar Canada, we're going to go to some other signals to give you some idea of where these markets are going with the dollar bears. And this also supports the dollar bearish trade going into unemployment, which we've been talking about all day. All right, Australian dollar, Canadian dollar. So this is Aussie dollar has been a bear for a while. And this market I've been talking to Tommy about for weeks. Sorry to talk fast, but we want to get this all in. Is in a bear trend for political reasons, technical reasons, fundamental reasons, you name it across the board. This thing is a bear. However, we had a bullish engulfing line buy signal that occurred a couple sessions ago, and as you can see, the Australian dollar is gaining versus the Canada. Interestingly enough, the Canada is the one that's not really gaining against the dollar right now. Well, with the Australian dollar doing this, what have you, that's why. So we're ending the show. Thanks for having me, guys. Let's talk to you. See you guys next week.